Hope everybody's doing well. Good to see you guys in here. Got all the cool kids. Each and every one of you. I like it. Mic check, everything good? Feeling good? I like it. Good morning, Andy. Good to see you this morning. Looking over my names, all you shiny happy people here. It's good to see you. Hey, Jack of all trades. Nice to see you too. Welcome to the room, guys. I am just pleased as punch to be here today. And we're going to check a little news, get things going. Hey, Victor, Ron, great to have you. Let's see what's going on in the wonderful world of news, guys. 9:30 a.m. Fed Chair Powell speaks. I saw Ron joking. Maybe he'll retire. But anytime this guy talks, he's like E.F. Hutton. People listen. And there may be somebody that reacts. Somebody may go, oh my gosh, I don't like what he had to say. I'm going to dump all my money into the market and sell. Or, hey, I love what he said. I'm going to dump all my money and buy. And while we don't know what the market reaction is going to be, that red box next to the announcement lets us know that there is the potential for a reaction, guys. And when you're trading patterns and you rely on those patterns to give you an edge, it's important to know when those patterns can be disrupted. 10 a.m., we have the same thing, guys. ISM manufacturing, JOLTS job openings. These have the potential to move the market. Hey, Steve Diego. Good to see you. Did they get you all squared away yesterday, Steve? I always like to check back in with you guys whenever you have a tech issue. Make sure that everything was taken care of. Tech got you squared away. Good to go. I don't know why. You got the best tech crew in the world. I assume they did because they're good like that. Guys, every morning this is a part of my routine. I wake up, I pour a cup of coffee, I sit down at my desk, and as I'm opening things up, the first stop is always forexfactory.com/calendar. I don't want to trade into these potential news releases. What we're going to do today is really the same thing that we've done every day. We're going to look at the market, guys. Worked with Chris. He's a whiz. He's something special, isn't he? Something special. Guys, we're going to go through and we're going to look at different markets. I've got on TradingView, I've got NASDAQ charts. I've got S&P charts. I've got crude oil charts. I built a gold chart. And I even have an RTY chart because we started looking at that a little bit yesterday because I knew I had a visitor in the room. And just for my wife, I've even got an XRP chart. And the one thing that you're going to notice, guys, is these markets go up and down. The market goes up, the market goes down, they bounce off of areas. And what we're going to do is we're going to take the next few hours and we're just going to read our indicators. We're going to read the charts and see what they have to say to us. This is the S&P on NinjaTrader. Blue Fibonacci support held the market like it was meant to do it, reversed the darn thing. And guys, you know about these areas. And what Nexgen does for you is you know where the market may turn. You know where it may bounce. We're going to talk about over the next couple hours, guys. Hopefully it's a discussion, not a lecture. We're going to talk about a way to capitalize on these patterns. And we're going to do it initially with this concept. This is the recipe for a high probability trend trade. This is a trade that when you follow the rules, it typically wins 70 to 80% of the time. I've been teaching this trade for 6 hours on 6 years on NinjaTrader. And it's not the trade or the name of the trade that I really want you to focus on, guys. I want you to focus on these. These are the advantages that are produced when the rules are true. So the recipe for a trade, and this is going to be a very, what's the word I'm looking for? This is going to be a very general idea of what I'm looking for every time I enter the market. And it doesn't matter if you are looking at NinjaTrader, it's irrelevant. If you're looking at TradingView, we're going to define momentum and clear path. Momentum and path every time. And we're going to use trigger lines to do it. So on NinjaTrader, there's two triggers. There's a small trigger that's two solid lines. There is a large trigger. It's the two dashed lines. These are just moving averages, and we can use them to define the momentum in the market, guys. So rule number one says that we want strong triggers. Strong triggers is a look. That's all it is. It's a separation between these small and large triggers. There's a gap. It looks like scissors that are open. And when the background is green and I'm in an uptrend, smalls above the large, space between, this look right here. This lets me know that the odds are favorable for the market to continue up. So odds favorable momentum is what your brain should say when your eyes see this. In a downtrend, when your backgrounds are red, small triggers will be below the large triggers. It's that space that's created between the two. It lets me know, hey, the odds are favorable for this market to continue down, guys. And what you're looking at is a market with the potential to continue up or the potential to continue down. And this odds favorable momentum is what we look for to break key Fibonacci areas. Odds favorable momentum sets you up for more trades. Odds favorable momentum, guys, it even covers some of the mistakes that we tend to make as new users. And momentum goes away when the small triggers work their way inside of the large triggers, guys. Picture scissors closing, coming together, clamping shut. When the small triggers work inside of the large triggers, we have weakness. And when we have weakness, anything could happen up or down. The same is true on TradingView. Smalls above the large, that's your strength. Small below the large with a red background, that's your strength. And then there's your weakness. So that's going to be the core of really everything that we look for. We're going to let it begin with momentum. And then we're going to use these areas on the charts, areas that we know about long before the market gets to them. And we're just going to count triggers when the market gets there, guys, because triggers tell the story. Triggers always tell the story. So when we see areas, whether it is Fibonacci support or resistance, whether it's a yellow 1-to-1, a divergence high, divergence low, any area on a chart can stop the market. On NinjaTrader, we're looking at the large chart. And let's bring this up. You'll notice that the market came down and it was screaming down and it hit Fibonacci support. And this is where we're going to count triggers, and you're going to say, I have 0 triggers through support. This is an area that may stop the market. Sure enough, it did. Did a great job of stopping the market right up to Fibonacci resistance with 0 triggers through Fibonacci resistance, and look at the bounce. So we're going to count triggers, guys. So whenever an area is reached, I just want you to ask. The triggers are the answer to everything, guys. If there are no triggers, I want you to assume that the area will hold, that no matter how much you want it to continue through those yellow 1-to-1s, no matter how much you wish it would go through support, it simply won't. And what this does is it keeps you from trading into areas that could reverse the market, and it keeps you from giving your money away via hope rather than just good analysis, right? If 2 triggers break through, it does have the potential to break, but it's less likely to break with only 2 triggers through. It's when you start getting 3 triggers, both small and 1 of the large. That's when the potential for a breakout really starts to come into play. So every time you get to an area, you're looking to take a trade, count triggers. Only 2 triggers make it through Fibonacci support, and it doesn't hold. No triggers through yellow 1-to-1s, and it holds. Absolutely no triggers through that mid band, and it holds. Pretty cool, right? Weak triggers, retraces back to a mid band, and it holds. So we're going to count a lot of triggers. And what this is going to do, guys, is it's going to help keep you patient as well. And you're going to realize that 95% of your day is spent reading indicators. 95% of your day is waiting for advantages. But man, when you have momentum, when that path is clear, you are going to attack. You're going to react. You're going to say, I've got a market that is screaming in the direction of the trend. There's absolutely nothing in the way to stop it. Let me find an entry. And the easiest trades that you will ever take, the easiest trades that you will ever take. Where on earth are my pictures? This is my favorite picture. When you are trading away from Fibonacci resistance, all the momentum, you will find a way. And hopefully that way carries you to the next area of support. And what a great exit. And when you have that momentum, you will find a way. And guys, momentum and path, that's the core of everything that we teach in this room. Momentum and path. When you have it, this is your momentum. This is what I want you to see in your head. I want you to hear the rumbling of all 36 of those engines. It's going to be hard to stop, especially when there's nothing in the way. and your target is the mountain, guys. And you're more likely to get there via momentum and path. So every chart that you present in this room, every time you put in a room, my only request is that you describe it. So this does a couple things for me. When you tell me what you see, hey Mark, these are strong triggers. What you're doing is you're asking, hey Mark, am I reading my indicators correctly? Did I identify strength the way I was supposed to? And then you're going to talk about whether or not there's something in your way that could be problematic. And you're going to say, hey, this has the potential to break, Mark. I know because 2 triggers are through the area. And then you're going to talk about your entry. This is where I got in. This is where I chose to get out. And the question that you're asking, did I miss anything? Did I do something wrong? Did I do everything right? Is there something that I can do better? And guys, if you post in the room, that's what's going to help get you to where you want to be. Every time you post in the room, it is a private session with me. It's just the 2 of us, and we're looking at your chart. And on your chart, I'm going to say, okay, let's see. Try it again. Probably not the best annotation for this example. That's the second half of a chart that was posted earlier. Dag nabbit, Jen. Strong bottom. So here we go. Steve Diego says, Mark, check it out. None of my trigger lines got through that line, which means that it's likely to hold the market. And when it went the other way, I had odds favorable momentum. It had the potential to break. And Steve says, I'm going to pinpoint my entry. I'm going to try and take a momentum trade. And if the momentum trade doesn't work out, I'll take the trend trade. But he went from 98 to 08, 2 contracts, $200. That's a fast trade. And it's based off of the idea that an area stopped the market, that it created all the momentum he could ever hope for, and he will find a way. And Steve, nice chart, good annotations. Jen, that's okay. You are usually so spot on with every one of your annotations. I took a risk there that I was willing to take. So post in the room, guys. This is the easiest way to get to where you want to be. If there was a challenge with your trade, maybe you misread indicators. Maybe you got in at a point that it just doubled, tripled your risk instead of waiting for a more conservative entry. Maybe you held a trade too long. Maybe you jumped out too early. We will have that conversation. And then, guys, keeping it simple. 2 trades in your plan. And I put a big thing about trading plans in the chat box earlier. And I did it for a reason, guys. And I won't make you do, I won't make you go through it. But AI, I'm starting to become a fan of AI. Having a plan. And we talk about checklists in this room a lot. Knowing what you're looking for, it provides structure and discipline. The most successful traders that I work with do the same thing every day. It's repeatable. And they do it because it provides an edge, because it's a pattern that they prove wins more than it loses. Your plan will help you manage risk. You'll have an exit strategy for every trade. It'll enhance decision making. Guys, you're making objective, not emotional decisions. It will improve consistency, and man, it reduces stress. Because when you believe in your plan is like the Bible that you follow every day. Your plan is the whys you'll get in and the whys you'll get out. And initially, most of us can't write a plan. I couldn't in the beginning. So Nexgen was nice enough to hand me a plan. And they did it, and I've rewritten it, but it's the KISS plan, guys. And it focuses on the entry for a high probability trend trade, and it gives you a checklist. It talks about management, and it gives you a checklist. And it even gets you into those trades where it has the potential to break. And the entries and management both have a checklist. And then there's also the plan that I dropped in the room for TradingView. Does the exact same thing. It's nothing more than if-then scenarios. If my rules are met, then I enter the market. If my rules are not met, I choose not to enter the market. And the more variables you throw into a plan, the more charts, the more time frames, the more indicators, the more likely you are to accidentally make a mistake, to go outside of that plan. So simplicity tends to yield results. The goal is to learn the looks. Why will I get into the market? What's it look like when it's time for me to take a trade? Well, I've got 2 things for you. I've got the Nexgen tracking sheet, This one, if you're on NinjaTrader, it defines strong triggers, clear path, and entry areas, gives you examples of when the rules are met. Red tells you when they're not. There's about 500 pictures of Nexgen users from all over the world doing it well. In the green section, ideas on management, things that repeat themselves. There's a place for you to put all of your pictures because that's the goal, guys. The more pictures you take, the more times you annotate, the more you see, the faster you see it, the clearer you see it. Get in the habit of taking a lot of pictures. And then a trade tracking sheet, guys. Every trade you take, win, lose, or draw, post it in the room and talk about what you saw. And then describe the momentum and describe the clear path because these are the two that are going to be the core. And then take a second to talk about the feedback from class. What did Mark say about it, right? Because, guys, I don't have any emotion. When I look at your charts, there's no fear about winning or losing. There's no anxiety about whether I did the read right. There's no nothing other than, hey, you had strong triggers and your path was clear and you took a perfect pullback to an area inside of triggers. And I noticed that you made a lot of money on this trade. And the feedback is going to be, holy smokes, great job. That should go into your plan. That's the perfect trade. Sometimes the feedback is, hey, Jen, I saw what you did with your momentum trade, but you missed the idea and the rule that momentum trades come from an area right at those small triggers, and you didn't have any. And what that does, that little adherence to rules, it keeps you patient, and then it sets you up for the one that utilizes areas inside of triggers. Jen, this was a little feedback on the momentum trade that you took earlier. Just one little piece missing. In the moment, in the heat of battle, Jen's like, I'm calling my shots. I'm so good at this. I know what I'm waiting for. I know what I'm looking for. And this almost looks like it, but it turns out that that was it. And Jen, it was so close. But Jen takes the time to annotate her charts, to post them in the room, and really just to say, hey, Mark, did I miss something? Sometimes we do, sometimes we don't. Sometimes we high five. Sometimes there's a correction in there, guys, but that's what's going to help get you to where you want to be the fastest. Post in the room. The people that post the most typically make the most money. So when we go back to the live markets, this is the S&P, and we're just going to talk about what we see. So guys, smalls are above the large. There's space between the two, but even with this level of momentum, price reached Fibonacci resistance, and I have to say right now, none of my triggers are through. So while I have momentum, my path is not clear. You can see that Fibonacci resistance already created a big untradeable bounce, darn near to the tick. So I've got one rule met, and I don't have my second rule met. I don't have the momentum that I need to go with that path. And my choice is to simply not trade. I don't have an advantage. This area could stop the market. And if I'm not mistaken, the sellers already told the buyers no once right at this key area. So I'm just going to wait. What are they going to do? Are the buyers going to take control and push that market up? Or the sellers going to decide, you know what, we had unfinished business lower than here. One of these areas is going to break. I'm not going to trade directly into them because it doesn't fit my plan. It doesn't fit my rules. There is not an edge. Crude oil couldn't get through that pink line. The small triggers could, but the large triggers couldn't. Everything rolled. I have momentum, and this area, 65.51, has the potential to break. Two triggers are through, two triggers are not. If I choose to take a short trade, guys, there's a recipe. And the recipe says wait for a pullback. When you get a pullback, look for areas. Look for fibs, midbands, yellow 1-to-1s. Whoops. But it's important that they're inside of those triggers, guys. And if the market comes screaming back, this circle represents the point where it's most likely to bounce, where it's most likely to continue in the direction of the trend. So we'll see if the prophecy is fulfilled. If you are a next-gen momentum trader, that snap back to 65.60 right at that key Fibonacci area, that is the momentum trade. This is the one where you can anticipate the breakout based on the momentum. If it works, outstanding, it's going to work. If it fails, the next option is the trend trade. So we'll see what happens. We'll come back to it. We'll look at it. We'll see what's going on. Trading view, guys, this is the NASDAQ. Big ugly key areas, no triggers through, and sure enough, there's a big bounce that would have completely ruined your good time if you tried to go short. The S&P didn't quite make the area, and it pulls right back to this zone, and you'll notice that's where the bounce and the continuation down came from. Crude oil, big zone stops the market. Gold, that is the first change in trend since yesterday. I posted this in the room. The market has been in an uptrend since 8 a.m. on Monday. That is the first indication that they might be done. And it's probably not a coincidence that they're done right at one of these key zones. There's your roll on a smaller, faster chart. There's your pullback to an HVA line. Kind of cool. And then the RTY, we're right at the outer bands. Everything says down, no big zones. And guys, there's one of those trend trades where the market pulls right back to the mid band. Eventually it closes below and the market continues down. I'm new to the RTY, but I notice a lot of overrun. So important to wait for those closes below the areas, below the fast triggers. So I'm going to start clicking on charts that you guys have posted, guys. When I click on them, I'm using a recipe. And I'm going to give you the recipe that I use every time I look for a trade. If I'm saying to myself, momentum and clear path, that's my core. When I have them, I'll find an entry, guys. When I have all three, when each indicator on every chart agrees with the rules for the trade, I have a high probability scenario. When I have a high probability scenario, this is where I love to hold for bigger moves. This is where I will let that large chart hopefully run to the next areas. And this is really the best of the best. When I have one of my advantages missing, and momentum is gone in this picture, but it could be clear path, it could be entry. Guys, this puts you in the medium probability range. And when you have a medium probability range, it means that most of your indicators agree with the trade. However, a small issue exists. You will be able to identify that issue, whether it is a lack of momentum, whether all four triggers aren't through the area, or whether your entry area isn't as clearly defined as you would like it to be. You can still take these trades. This will probably be the majority of your trades, but you're going to manage a little more assertively. You're going to get to break even a little bit faster. You're going to get those profits in the bank a little quicker. And then finally, if you're missing 2/3 of what it takes to give you warm fuzzies, if you're missing momentum and path, and all you have is an entry area, it's low probability. Guys, if all you have is momentum, it's still low probability if you're trading into areas. If all you have is a clear path without momentum or an entry, it's low probability. And there's got to be a point in your life where you say to yourself, man, I don't want to risk my hard-earned money in low probability scenarios. You control the entry. I think this is something that isn't said enough to new day traders. You're in control. Nobody can put you in the market. You have to put yourself there, guys. So when you talk about every time you look at a chart, what's working for you, what's working against you, it helps you make entry decisions, guys. And it just goes back to, does it fit my plan? Or are my rules met? It's also going to let you know how aggressively you need to manage a trade. If you are in a trade that relies solely on momentum, guys, you're going to manage aggressively and say, when that momentum is gone, maybe I don't want to be in it anymore. So go through this every time you're taking a trade. Talk about what's good, what's not good, and then make your decisions based on that. See if it fits your plan. Your momentum trade here is still railing to the downside. Some of you probably caught that. Some of you probably got in on the close right around here, made your $100 and said, you know what, it's only momentum. I'll hang on for a second. And then if it retraces, whoops, account is not connected. Not sure why my account is not connected. It looks like it is. We're going to let that run a second, see what happens. Pete, you did take it? Awesome. I'm having trouble getting NinjaTrader to connect right now. Joel, you got it too? I like it. There we go. Now I'm getting connected. It'll reload. So I'm going to use this example. When this chart comes back up, I'm going to use this example of how we're going to chart read, how we're going to look at what you present, how we're going to talk about what you did. And hopefully yours is similar to mine. All right, here we go. Let's get a fib or two in there just for grins. I do love a fib. Still calculating. Guys, a little NinjaTrader trick. If you see that calculating, don't touch your charts. Don't touch your charts. All right. I pulled this out because I think this is important. Every time I look for a trade, guys, every time I get feedback in this room, I'm going to ask, did you have momentum? Smalls below the large, space between. Does everybody see that, yes, in fact, I do have a market where the odds are favorable for the market to continue down? That's the first thing I look for on every chart. Then I say to myself, do I have a clear path? Well, 2 triggers through the area, 2 triggers above. My path is not clear yet. It's only clear when all 4 triggers are above the area. So I know that I have the potential to break because of momentum, but it's only potential. And then I have to ask, do I have an entry area? I have a clearly defined Fibonacci area. Small triggers have broken through. The market has tapped it. That's your entry. And down it goes with all that momentum. So I've got 2 out of 3. And then let me give a little management look here. If my reason for entry is momentum, my management may dictate, because I don't tell you guys how to trade, this is an educational room, that a loss of momentum is an acceptable exit rather than hoping the market goes down forever and gives me millions of dollars on my first trade. Your loss of momentum in this particular trade is that close on the correct side, on the wrong side of the triggers. And guys, this right here from 60 to 40 before that loss of momentum, that was $200 worth of profit per contract available. And all you had to do was get paid. When those momentum trades fail, very often, they turn into what we call a trend trade. And that's where we start looking for those areas inside of triggers on this pullback. So one trade is not the end of the world if it doesn't go forever. One loser is not the end of the world. Great trades are going to lose every now and then, guys, and horrible trades are going to win. The idea is that you go through and you say what was good, what was bad, and your annotations, the things that you write on charts, are going to serve as a recipe. So when you're doing things great, when you're having successes, when everything's doing exactly what it needs to do for you, you've written out how you were able to capture that, how you were able to take advantage of it. So we're going to start with Andy, and Andy's presenting a trading view, guys. 2 different platforms. One's not better than the other. They're just different, but we can still gauge areas that hold momentum and all the good stuff. So Andy says, check it out, Mark. This area held, and it created that momentum that I'm looking for. And Andy's trade is up here above these problem areas. Andy gets a pullback. He gets in above the triggers, and he makes money. And it all starts when an area stops the market, when he has momentum, when areas have the potential to break. Andy found a way. He found an entry, and he said that he got out at the outer band, and that is on the NASDAQ 7 points, which is about $140 per contract. Nicely done, Andy. And then Wayne coming in. And And Wayne says, check it out. Bum, ba, bum. So HVA, then 50-50. So Wayne says, first I have a strong bottom, which means that there's a termination. Absolutely none of the triggers get through, and the market reverses. When it does, market opens in 2. Thanks, Ron. When it does, guys, there's a third chart you can add as you grow. If you're in TradingView, you've already got this on your 1 minute chart. This is a high volume area chart, and it creates this green line that says, hey, not only did this area hold on 3 charts, we got a super strong buyer breakout bar. It was confirmed with another up bar, and this is where the buyers all got together and said, hey, if the sellers try to push back, this is where we're fighting. And that's exactly where Wayne got in long. Takes it right up to trouble. And then by the time he exits this trade, he's got momentum. He's getting above areas, and he just pulls right back to an area right inside of triggers and finishes the move up to Fibonacci resistance. Wayne, awesome trading. Really great done. Took advantage of understanding where the market could turn with this first trade. And then once that trend is established and the momentum is present, use a trend trade to get up to the next key area. 2 different trades, 2 outstanding results. And Wayne says, you know what? I can do it on either chart. I don't know if you've met me. The large chart says up. The background is green. The indicators are up. The fast triggers are up. And Wayne, one of the things that really makes this trade great is price is trading to the left side of the small triggers. It gets to the zone. The smalls are up. He says, look at this. The smalls are above the large. My large are going up. I'm right at key areas. I'm going to get in with momentum, and I'm going to hold it. And he holds it to 23, which is right up over here. So he gets in with the momentum up and gets out right at the outer band. Great trade. Making money on 2 different platforms. And this is my favorite. JTFI. For you guys not in the know, jump the fudge in. But most of you don't say fudge. The momentum is there. Everything says up on every chart. Momentum, 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 path, path, path. And Wayne says, I'm just going to jump in and make $100. Because when everything is screaming the same direction, when I can identify that with my indicators, why not? And this is nice, guys. And this is a trade that's really just, it's a strong trending market. He's getting above all the trouble. He hasn't gotten to the next trouble. And his other 2 charts confirm the same thing. Wayne, great trade. I'm not sure if Wayne's still in here, but he usually sees this on YouTube. So Wayne, I do want to say, because guys, one of the things that I do is I watch you grow in your plan, and I watch you through the everything that you do, going from struggling to recognizing to succeeding, and it's fun for me, like a proud parent. Wayne, you used to go short right here, hoping that you could fight everything, and now you're just going long and going with the flow. So if you watch this video, man, absolutely amazing progress. And guys, that's all we're looking for. Just a little bit better each and every day. Recognizing some patterns, getting into the market, getting out of the market, finding a way to succeed that's based on advantages, not hope. Great job. All right, Andy, the area holds. All of the triggers go up. This is the most beautiful trend trade ever, Andy. Coming from an area, strong triggers, nothing in the way, pulls right back to a mid-band and a zone, and Andy catches the entry right on the correct side of the fast triggers. Perfect execution. Pretty easy trade. Took half off, halfway up, have absolutely no risk, and just holding for the next key area. Andy, outstanding. And your charts are so easy to read and your annotations are so clear. So for you TradingView folks, there's your look. There's your trend trade. And what's cool is, Andy, I'm going to steal this one. And I'm going to go to my trading journal for this. And guys, I steal pictures in this room all the time. And Andy, This is the perfect trend trade long. So I'm going to give you credit too. Andy's perfect trend trade long. And you are the first person in the Trading View Journal. Nicely done. And guys, all it is a trend trade. And this look right here. Come back to the areas, to the zones, close on the correct side. Looks just like that one, doesn't it? It's just a pattern. That's all we're doing. Recognizing a pattern. Great job, Andy. All right, let's see who's next. Dun, dun, dun. All right, we got 2 from Joel. Joel, let's see what's going on in the wonderful world of you today. Not a good boy always. Joel says, check it out. Termination reverses the market, guys. The triggers don't get all the way through. There's no momentum. Misses the fib by a tick or two. He's like, that's a pretty good look. And look what it did to the market. There's all of that strength I look for, Mark. That's small, below the large, space between. He's annotating it. He's saying to himself, this is my look. He's saying, this is what it looks like. This is what it means to me. And with this look, guys, nothing in the way. He says, all I have to do is sell a pullback at an area inside of these triggers. And this is my high probability trend trade. And it's easy money, Andy. All the way down to, or I'm sorry, excuse me, Joel, all the way down to the third divergence. So guys, this is a pattern. This is a pattern that first had momentum, had nothing in the way, and you define the entry. First it's momentum, then you gauge the path, and if it's good on the big chart, guys, go find a way to capitalize, whether it's jumping in with momentum, whether it's pulling back to areas inside of triggers. There's always a way when you have a recipe, and you'll notice that he has a checklist to make sure that he's following rules. Odds favorable momentum. The path is clear. He takes a pullback right to the area inside of triggers. And guys, this one doesn't work. And there's 2 options when this trade doesn't work. How do you turn it down? Russ, you should have a volume control for your computer on your computer. It looks like a little... Whoops. See that bad boy right there? You should be able to close. You should be able to turn it down there. I have to turn mine up because Discord doesn't record as loud as I need it to. You guys will have to adjust how I come through with your volume. So I want to take this trade, and notice that he was able to use the checklist. And if we take a picture of this trade, not working. Thanks though. Your volume doesn't work. You have it turned as low as it could possibly go. Does anybody have any difficulties? Here, we can do this. Hold on. I'm not a quitter. Let's see what we can do here. Voice and video. All right, so here's what I'm going to do. Input, microphone. All right, so I'm dropping it a little bit, guys. If anybody has any challenges hearing me, Russ, is that better? If anyone has challenges hearing me, let me know. I turned it down for Discord. That's better? Awesome. I'm always looking to help, Russ. So guys, I take that very basic recipe right here. And the momentum was great. And the path was clear. And the entry was well defined. And this is where you have 2 options. Some of you are going to say, dag nabbit, heck fire. This lost. What did I do wrong? And some of you are going to say, this is a pattern that typically wins 70 to 80%. And then that math part of you is going to kick in. It's going to say, that means, or means, that means it has to lose 20 to 30% of the time. Have a great day. 20 to 30% of the time, guys. It's mathematics. If you have a pattern that can win 70 to 80% of the time, if you go back and you study this pattern, and I'm telling you right now, if you start clicking on these pictures, come on, you're going to see momentum. You're going to see the pattern, and you're going to see it over and over. And this is how you develop trust in a plan. What you find yourself doing is really just saying, you know what? This is a cost of doing business. This is a normal part of a positive equity curve. This is a pattern that I can prove wins more than it loses. That's how it found its way into my plan. It just didn't work this time. And every 10 trades you take, every 10 high probability trend trades you take, ladies and gentlemen, it's probably going to lose 2 or 3 of them. All right, who's next? And guys, I encourage you, if you have questions about somebody's charts, feel free to ask. I don't know everybody's trading plan by heart. If you've been with me for more than a month, I know your trading plan by heart. But I encourage you, stay in your lane. Learn your way a little bit. You're going to see a lot of people doing a lot of things differently than you might do it. That's okay. I had a conversation with a gentleman yesterday. Doesn't use Nexgen. We met on the golf course, and I said, show me what you're doing. I love what he's doing. It's good stuff. We're not the only way. There are millions of traders in the world, guys. I love what we do with Nexgen. I think we're the best software out there. If you're creating your plan, guys, trade your plan. All right. This is Pete. Pete's a troublemaker, just a heads up. Termination reverses the market. That's a strong bottom. Odds favorable momentum. That's the first advantage. He's getting above the trouble, potential to break. There's the momentum style trade. He's like, you know what? I don't want to take the momentum style trade. I'm going to force it to go in the direction I want it to go. We call that a confirmation bar, when it pulls back to the area inside of triggers. A lot of you got in at 65.22, made a little more money than Pete. Pete says, you know what? I really want confirmation. I'll wait for an up bar, and then I'll get in. And I'm willing to sacrifice 10 ticks of that trend trade, because with these advantages, it's more likely to hit Fibonacci resistance. And talk about an advantage. Look at his exit, 65.45. When he was down here, Pete saw that red fib. When Pete entered the market, Pete saw a point that could stop the market, that could create a reversal, that could. Guys, can you hear me? Oh my gosh. Everything froze up on me, like my entire computer. You guys have me now? Holy smokes. Sorry about that, guys. I don't know what happened, but it happened strong. I'm talking like, man, nobody's saying anything as I'm reading charts. So we'll get back in and we'll start looking at charts again. Sorry about that, guys. I couldn't even see you telling me that I didn't have sound. And I tried to type in the room 2 or 3 times and nothing came up. So we're going to get back at it. And let me figure out where we stopped. All right. And again, thank you for your patience on this, guys. Sometimes Discord gives me fits. It might be aliens for sure. Jen, did we get the conversation in on this one? I know that I had a lot of trouble loading it. I think this is where we need to start, where we need to come back. All right, so usually you reply to me. That's when I realized that I had a challenge. I was like, Jen's not saying anything. And she usually does. So let's go through. We stopped on Pete's chili dog. Thanks, Ron. All right, so we stopped on Pete. So that wasn't it, was it? That was it. Let me double check. I'm going to get there, guys. All right. Joel, Pete. So that was the last one, right? That was the last one that we saw where Pete says, hey, everything is strong and I've got all the momentum in the world and the potential to break, and I just want a little confirmation. And with momentum and the potential to break, I'm going to make a quick 530. And guys, I even pulled out my calculator to show you. I want you to see something about momentum and path, guys. And I want you to believe something about momentum and path. So this is a termination that reverses everything. And man, that's a great look. And this is the best momentum look you could ever hope for. And that's a great look. And that's what we talk about every morning. Learn to recognize momentum. It creates advantages. Pete hasn't reached trouble yet. And this area is darn near broken. And Pete says, wait a minute. There's that momentum style trade that I could take. He goes, but I'm not sold on the momentum trade. Let me force it to go in the direction of the momentum and the direction of the trend towards my target. And he gets out right in an area that could stop trouble. And I want you to see something. So Pete took 13 ticks on this trade per contract. In crude oil, it's $10 a tick. So it's $130 a contract. He took it with 4 contracts. This is a $500 trade. His timestamp goes from 6:35 to 6:38, guys. Which means Pete is making $173 a minute in this trade. That's a great way to make a living. And it revolves around momentum and identifying whether or not you have the potential to continue up based on the path. So Pete, outstanding job, man. All right, Miss Jen had the best lessons ever on this one, and then Discord didn't go. So we're going to start at the beginning on this, guys, because her read is brilliant. So this is a weak top. And a weak top means that it wasn't a key area that reversed the market. Notice Pete calls this a strong bottom because it comes from a fib. Jen calls this a weak top. It's not coming from anything. Market pushes all the way down, hits that mid band. Notice that only 2 of the 3 triggers are there, right? So these areas haven't even broken yet. The mid band gets hit. Large triggers are almost a full bar away. Guys, can you give me a Y if you can hear me? All right, cool. I want to make sure with the tech. David will know he needs to reboot or do something. He's been around long enough. Cool. So from that termination, small triggers roll up strong. Large are still above the area. And the area doesn't break. And Jen says, wait a minute. There's a momentum trade. Do you guys remember the other day when we talked about the apology trade? When you think this area may break and it doesn't, there's usually a pretty good opportunity going the other way. Well, Jen went to take it, and Jen said, check it out. I'm going to take this momentum style trade. And Jen, there was just one challenge with your entry, is you didn't have an area to support that bounce. And that is one of the key parts of this momentum trade, is making sure that you have something for the market to bounce off of. The cool thing is as you get in, and you did manage it well, we'll see that in the next picture, but this is the trade that would have been, well, the small triggers are great, right? But the small triggers aren't an area. Now the small triggers add an area, that's a good one. Or the small triggers break through and pulls back to an area, exhibit A, that's it right there. So it was just a, hey, let me get in. I'm missing one key component. You have to have an area. And then Jen, it pulls right back to the areas, right? And they're inside of the triggers. And you have that momentum. And Jen, does this look familiar? Area stops the market. Small triggers roll up. Sell a pullback or buy a pullback. That's that same trade. Nexgen's been teaching for 21 years. When an area stops the market, small triggers roll up. There's your pullback right to those large triggers, which happens to be to the small triggers. And just to add warm fuzzies, Notice that it's right at areas, 1-to-1s, fib, mid-band, and you got that one, and then it's the exact same trade, and that's the one that runs. So just a little premature on that one. Does that make sense? Just a shade early. But what I wanted to say is guys, when you get good at reading your charts and you start recognizing your patterns and you're getting excited about your patterns, this is where I like to speak for you guys. Jen says, oh, I love this look. And because of that weak top, this thing may go back up. And then Jen said, oh, I love these triggers rolling, because that means that the immediate momentum is starting to go up. And then Jen said, oh, these large triggers rolled. Life keeps getting good. Small triggers are getting above them. And she is literally anticipating, chomping at the bit, can't wait to take her trade. And she knows what she's looking for long before she gets there. And this is a new trade for Jen, and she takes it. And right here, she's like, yes, I was patient. I waited. Life is good. I knew about this trade for the last 3 or 4 minutes. Let me take it. And because she was anticipating and calling her shot so much, she left out the one key concept of an area. And guys, this is one of those things that happens. This is one of those things that happens. You see these, and you're like, I can't wait for it. I can't wait for it. I know what I'm looking for. I know where I'm going to take my entry. I know exactly what I can't wait to have happen. And Jen, it was just a click too soon. Just one mouse click too soon. But it turned directly into that pattern. And then, of course, on the S&P, because the market loves to help me with it, with examples sometimes, guys, it's the exact same look. There's a termination condition. There's those small triggers rolling up. And Jen, do you see the difference in the entry? That is your perfect entry for that trade that you were trying to execute. And it's in the moment, it's hard to see that difference. And that's one of the reasons checklists, guys, checklists are so important. Snap back to that area at the small triggers. It was one word gone, Jen. Great job, though. And it's pretty cool because it was almost the exact same time the S&P set up the exact same pattern. I love it. Great stuff. I appreciate you posting in here. Guys, there will be times where I'll take one of your pictures and I'll turn it into a giant lesson. And you'll be like, oh, Mark, stop talking about me. And this is where I sang your praises. I'm so sad that we missed this one. Guys, losses are normal. Everybody's going to lose trades. I don't want you to believe for a second that you're going to bat 1,000 as a day trader. It just doesn't happen. This is the difference between somebody who's confident in their plan and somebody that's learning a plan. So Jen's learning this trade. She made a mistake. No big deal. She manages beautifully. Small loss. And Jen says, this one fits my plan without a doubt. And she had 5 bars to work through her emotional devastation. She had 5 bars to let go of that loss, and she's right back in the market and getting paid. Nice job, Jen. That's a great recovery. There was a time in my life when I raced motorcycles, and they used to say the difference between a novice and a pro isn't the ability, but rather the ability to recover from mistakes. And Jen, you did it like a boss, like an absolute boss. Great job. Horrible annotation. If I knew that was there, I would have never clicked on it for the example. Just kidding, but we had that. We already knew what we were looking for. All right, Steve Diego. Strong bottom. Termination reverses the market. Guys, remember that phrase, strong top or bottom. Odds favorable momentum. 2 of the 4 triggers are through. He takes the momentum style entry. It doesn't work out, but it doesn't matter because he made $200 in a matter of seconds and then could have taken the trend trade to finish the move. Nicely done, Steve Diego. All right, Pete. One of the things you guys are going to notice And I want this to resonate with my newer users in here. One of the things you guys are going to notice is that people that are presenting the most winners are typically doing the exact same thing. Doing the exact same thing over and over. So Pete says, look at this. You'll notice his annotations. Where am I coming from? What do my triggers say? Do I have momentum or do I not? Is there potential for it to break? Cool. Pete, you tried the jump in. It didn't work. It turned into a trend trade. And you rode that momentum all the way up to trouble. Absolutely beautiful. So Jen, this is the same trade you took. He gets in, hoping momentum carries it. When it doesn't, it turns into the trend trade. Very often you're going to see that, guys. Momentum trades that fail, when the large chart's perfect, just turn into trend trades. Great trade, Pete. Nicely done. And then when the market can't break, oh, and he says, this is why I use trailing stops. Why give it back? Right? It's, Jen, I'm not going to let you get away with that one. Pete's isn't better understanding. You want to know why? Dun, 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 dun. Because it's identical to yours. It's the same understanding. When the momentum trade fails, it can turn into a trend trade. When the momentum trade fails, it turns into a trend trade. You guys are two peas in a pod. You read it exactly the same. 100%. The execution's a little different, but the read is the same, which is awesome. Nicely done. And then Pete says, guys, it's okay to get paid. One of the greatest things, well, different management plans, right? But the chart read is the same. And I think that's such a key point. Thank you, Miss Jen. The chart read is the same, 100%. The chart read is this stopped the market, this created momentum, there's my entry, right? The understanding and the advantages are identical. The execution becomes different because we're all different people. Some of us take quick pops, let me make $200, get the hell out. Some people say, you know what? I'll hold it all the way up to this pink line, and once I get there, I will tighten my stops because I don't want to give it back in an area that can stop the market. Some people hold for bigger moves. Some people hold for smaller moves. Some people get paid often. Some people get paid in tiny increments, guys. There's no wrong way to make money as long as you're making money. You will find your way. The easiest way, dun, 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 here we go again, guys, broken record, is to have momentum and a clear path. Once these two are in play, guys, life gets easy. It really does. All right. Exhibit A. Lonnie, it's good to see you posting in here. Termination reverses the market. All the momentum in the world. Lonnie gets in a couple ticks above support inside of areas and takes the high probability trend trade right up to Fibonacci resistance. And Lonnie, I don't know that you could have done this any better. Can I ask you a question? Can I put you on the spot in front of the whole classroom? And I'm going to anyway. You don't have to answer though. So Lonnie, when you take a trade where you can identify momentum, when you know you have a clear path, and when you can easily define an entry area, right at an area inside of triggers, would you say this is an easy trade to take? Would you say this is a stress-free trade to take? And I think this is one of the biggest things, guys, is you're going to notice a correlation between your pulse, between your sweaty palms. When you can look at your chart and say, man, everything is great, you start saying things like, the only way I'm going to exit this trade is if they come and get me where they shouldn't go. The only way I'm going to get out of this is if they work harder than these advantages present. And man, it's such a great trade, Lonnie. And this is the easiest trade you'll ever take. Trading from an area with momentum to an area. You will find a way, ladies and gentlemen. Really nicely done, Lonnie. Thanks for sharing that. It's good to see you back in the room, too. All right, Joel. First, it's a termination. It's another termination. You take the momentum style on the small chart. Great way to mitigate risk. And then you do it again on the way down. Nicely done. Great trade, Joel. Miss Jen. Oh, beautiful. In with momentum, get paid, out with a loss of momentum. You guys are going to see this a lot in the room where we're going to watch the live market and I'm going to say, all right, here's what we're looking at. Here's where we see it. This is what could happen if, and guys, the momentum trade failed and pulled right back to an area inside of triggers, and that's where it continued down, and it is continuing to continue down with momentum and the potential to break. Jen capitalized right here. A lot of you guys did. That loss of momentum puts the brakes on, pulls right back to an area inside of triggers. Never gets out of the triggers, never gets back above the area, and it continues down. Momentum and path. There's your momentum. 3 triggers through. Absolutely beautiful. Let me open up another workspace because I forgot that I closed this down. So I'm going to get the S&P going. And we're going to back up and click on the next one, guys. Let's look at TradingView. What's it doing? Whoops, paper trade. Dun, dun, dun. So this is, let's start on the NASDAQ. Mid-band, zone, 0 triggers through. The market ricochets. There was your news spike. Now we're waiting to see what they want to do. S&P is going to look exactly the same. There's that 10 a.m. news spike. But it's right to a HVA after a termination condition, guys. Pretty cool. Crude oil. We're into areas. That area created consolidation and a bounce and a bounce. And we're still into the areas and we're still bouncing. Sometimes you won't get a clear path. Sometimes 90% of your day is doing absolutely nothing. Guys, one of the rules that I have in my own personal trading, if the market is outside of these outer bands, I'll force it to get back inside before I even think about shorts. And they're trying, but until I am decidedly back inside of those outer bands, I am totally cool sitting on my hands relaxing. Did we see this one? We did. Great trade, Miss Jen. Steve Diego. Strong top, pivot, stop out. Not quite because the small triggers get through. But it is a pivot stop out. It does reverse the market. It does produce odds favorable momentum. You take the jump in trade with strong top on the 13.2 would have held for a potential trend trade or my target hit, but with a loss of momentum and close to 930 open, took a break even. You do that. Missed target by 1 tick. Should have exited trade immediately on the bounce up, grab some profit. Man, Steve, it's so easy to shoulda, woulda, coulda, right? It's so easy when the market is sitting still to say, this is what I should have done. When the market was screaming and bouncing and emotions were running. And you know what? You managed it nicely. You really did. A little bit earlier on the entry when the back of the bar is clear gives you a little more wiggle room for sure. But you did everything right. Just didn't produce a winner. But it didn't produce a loser. When momentum went away, you exited your trade. Paul, just showing pictures. It's pretty. I'm not sure what we're looking for there. 82, 90. Again, Paul, give me a little context, brother. I'm not sure what you're showing me. I mean, it's nice to see you. but I'm not sure what you're showing me. All right, Russ Loom Tech. There's that strong bottom. There's that momentum. There's the potential to break. And you just jump in, right? And you're able to get paid. And I like that you got paid, Russ. Prince full bar above fib. Oh, okay. So are you looking, Russ? I just want to make sure. Are you looking for that chili dog kind of trade where you have all the momentum, get above the areas, sort of thing? Yeah. So one of the things, Russ, I like the trade, and I just want you to something to think about. See how that pink line created a bounce? It could have very well done it right here as well. So when you're looking for that chili dog trade, the back of the bar past the area is awesome, but you've got to kind of take all these little areas into consideration because each and every one of them could create a bounce. Go back here. Look at that. S&P news made it go crazy. And I'm trying to see if we can find a pretty good example of that. And this is it. Once, no, that's not a good example. I guess this is a good example right here. Back of the bar clears, but it's directly into that line. Do you see it, Russ? And sure enough, that line's the one that creates a bounce. So just anytime I'm doing that trade, and I love that trade, have all the momentum, I just want to make sure there's not something in the way here. So when the back of the bar clears here, Russ, what happens is now you've got, right there, now you've got smooth sailing if momentum's going to carry it. Does that make sense? I like it. Everything about you, everything you did there is solid. That's just one of the things we can throw in. Just one more arrow in the quiver to help you a little bit. Good stuff, man. Great job. I love those trades. We can thank Ron for that trade. And if you want, Russ, because I know you're looking at it, and guys, when I study, I share. I saw Ron taking this trade, and I screwed it up 1,000 times, just so you guys know, full disclosure. And Russ, the Word document that I just dropped in the room is my study on the chili dog, which is what Ron named the trade. Steal it, take it, look at it. Let me know if you have questions about it. It's not a next-gen trade, but it's a trade with enough merit that I wanted to study it, and I did, and I like it. All right, Greg GB, good to see you. Gold again. So there's your entry. Let's see. There's a strong bottom. You're not going to tell me why, so I have to guess, right? Greg's like, Mark, you're a chart reader. Figure it out. There's a strong bottom. Weak triggers. None of them through the termination. Pull back to an area inside of triggers, and you make money. Sniper entry based on large chart advantages. Market flow backs it up with an HVA and odds favorable momentum, right? There you go. Was cons for a while? Gone for a while? Yeah. I notice when you guys leave. I notice when you come back too. I like it. Oh, consolidation. Yeah, it was. It definitely was consolidation. 3 divergences in the same price range, right? Says, hey, give it a break. Wait for a second. It's not a coincidence. Those 3 divergences happen right at a key area. When it breaks above and pulls back, notice that your entry right at areas inside of triggers is the top of that consolidation zone. Not a mistake. It's a beautiful trade, man. Beautiful trade. I like it. All right, so this is where I ask new users, check it out. Russ, it worked without anything in the way. Amazing. I know I've got new users in the room. People, RS, I believe you're one of my new users. Guys, the thing that I really want to stress about Nexgen and what we do, Fibonacci gives us the ability to predict, to know, to understand beforehand where tops and bottoms can happen just by counting the triggers, right? And then we use a momentum indicator to say, okay, not only am I above all the trouble, I've got the strongest market look ever. Let me just find an entry. Let me find a way. And that's what we do, guys, over and over in this room. We talk about the advantages on the large chart, and then we translate them into trades on the small chart. Trading through areas from a strong bottom, read in momentum. It is past the fast triggers. The first candle did print past the areas and bought a pullback inside the area. So Andy says this area held. Got to the good side of the small triggers. And you took a guess on whether this one would hold or that one would hold. And you said, you know what? Because this chart's suggesting up, and because we're coming from support, I'm willing to take a shot up to the area. Nicely done, Andy. Nicely done. All right, so let's read our charts real quick, guys. Termination reverses the market. That's a strong bottom. Smalls above the large, larger wide, space between. That's odds favorable momentum. But I've got to count triggers, guys. I've only got 2 triggers through, barely. 2 triggers not. I'm losing momentum. That's what divergence tells me. I do have an area inside of those triggers, but I'm not seeing a ton of potential to break here. So you've got to make the decision. I do have momentum. It is a strong bottom. I am getting a pullback. What does your plan say about divergence when it's only the potential to break? What does your plan say about those small triggers just barely getting through, not even close to 3 triggers, guys? This is where some of you are going to have to make decisions. Do I want to go long with this look? Do I want to sit on my hands and wait for it to get better? Paul says, I'll take it from the bottom of the window. Paul says, I like this enough that I'm willing to risk about 6 ticks. Strong triggers, nothing in the way. Paul takes a momentum style entry. Easy money, Paul. Nicely done. There's that look. With this momentum and the potential to break, snaps back right to a fib with the small triggers through it. He gets paid here. He gets paid here. And he says, if I get a reversal bar on the wrong side of these triggers, I'll exit the trade. If I don't get a reversal bar on the wrong side of these triggers, guys, I'm going to ride that trade up indefinitely. Really nice trade, Paul. It's just a momentum trade. Momentum and the potential to break. All right, Pete. This was a tough one that took 30 minutes to develop. Weak top, the triggers rolled. Odds favorable momentum, potential to break. Momentum trade fails. And Pete says, wait a minute. It's just a trend trade with this look. And he takes it again. And he puts a stop where the market shouldn't go. And they try to come down. And they try to come up. And he moves the stop behind this pivot. And he finally gets paid. And Pete, this is trust in the large chart. This is amazing trust in the large chart. Jen's like, that's my move. Large chart never changed. It always said down. It continued with the potential to break. Pete just held it. And man, that's a lot of risk, right? From 37 to 67. That's $300 per contract on 6 contracts. Pete is so confident in his large chart read that not only did he hold this, he added on to his position. And nicely done. And unfortunately, you didn't really make anything on this one. And you made very little on this one. Nicely done, Pete. Some of you can do this. Me personally, I don't have the stomach for it. I hate big holds like that. I'd rather get in, get paid, get out, do it again. All right, Paul W. Termination. Triggers roll. We're at the tail end of momentum. No momentum. 3 fibs through clear. No. It's with area. Whew. All right. Let's see what we have here, Paul. I'm gonna make it easier on my eyes. So the smalls are returning to the large, right? So we can say that the path is down, red background. We're losing momentum, and you've got 3 triggers through. And here's the one thing, Paul, that I want you to think about. I look for momentum to break areas. If I'm losing momentum, I have to believe the area is less likely to break. Does that make sense? And that's it. That's just kind of saying, all right, what's it take to break an area typically? Typically it takes momentum. Well, I'm losing it. And I lost it again here. And my large triggers are up, and my small triggers are stuck on top of them. So I don't have momentum here either to push it. Does that make sense, Paul? So it's a momentum type look. Getting in down at the very bottom, letting it pull back. Still a medium probability trade at best. And then it tries to go down. You just got caught up without enough to push it down, is really kind of what it did. And then your stop is right at the area inside of triggers. So I think this is the man, it sure looks like it's going down. Small chart doesn't give you a whole lot. If you had gotten in up here already, it's an easier trade. But then you don't get another area to trade from until this fib. And even that one would have produced an easier trade, taking the pullback to it, to either the fib or the midband, instead of just trying to jump in at the very bottom. And this goes back to that lesson. These lines can create a bounce, and that's exactly what it did. And it bounced you up right to it. Does that make sense, Paul? Large chart suggests more down, but it doesn't have a lot of push behind it. You don't have that big semi truck railing it to the downside. So when this isn't perfect, I really demand for that good entry area. All right. This did everything our indicators suggested that it would. And let me show you what I mean. The perfect trade is momentum, path, and entry. That's the perfect trade, guys. You've got momentum for days. Both charts are strong. Or here you go. Strong triggers, separations, good. Guys, your path is absolute garbage. Small triggers really didn't smash through. It's trying, it just can't. And even in the moment, that second trigger wasn't really going. Let me guys show you how I define triggers through an area. I want you to think of triggers as a car. The area is a brick wall. If the tail end of your car doesn't make it way through that brick wall, guys, you didn't make it through the brick wall. You didn't make it through the brick wall, so your path is gone. Now, if your idea was, you know what, momentum can break areas. That's awesome, and I love that concept, and momentum breaks areas a lot. Divergence, whoops. Divergence is a loss of momentum. So once this divergence prints, I lose part of my advantage here. I get out of medium probability. It starts going lower probability. At the beginning of class, I dropped in what we call the KISS plan. And the KISS plan is the, hey, I'm not ready to write my own plan. Let me follow one that can be proven to win more than it loses. And I want to take the picture of the entry. The best of the best, the highest probability, the warm fuzzies, rainbows, and sunshine way to take one of these potential to break trades. And there's a couple things that happen, moving parts on this one. The first thing is that it's a termination condition that reverses that market, and we have it, and it's good. It's also odds favorable momentum, strong triggers, and that's good. Smalls outside of the large on the 5-1, that's good. So I'm covering the good things first, because your brain is going to look for the good. Your brain is going to look for the good. It's going to look for the reasons to get you active in the market, because it's going to convince you that you can't make money if you're not in the market, which may be true, but you also can't lose money. Now let's look at some of the key things. For this trade to have the highest success, 3 triggers should get through the area at least, and we didn't even have 2. And it also says no divergence on the 5-1, and that showed itself, right? Sorry, so this is a no. This is a no. And guys, that divergence, that loss of momentum is such a key part of the success of this trade that it even reminds you, no divergence, no trade. So some of you are going to say, you know what, with all that momentum, I'm going to take it from the bottom of the window. We heard that in the room. From the bottom of the window, there's only 6 ticks risk. Guys, 6 ticks risk on the S&P is $75. So we're going to do just a little thing. I'm willing to risk $75 without the advantages that I need to take a trade. Well, if I do that once a day for the 252 trading days of the year, I have to overcome nearly $19,000 of rules breaking just to start making money that year. Does that make sense? It's only 6 ticks. 6 ticks adds up. You've got a checklist to get you into the market. You've got a checklist that helps. So one of the things some of you guys will do on a trade like this is you'll say, I know it's not perfect. I'll force a confirmation bar. I'll force a reversal bar. At least then it establishes a little bit of risk for me. It goes in the right direction. Never got it. And now we're into the exact same thing here. Price reaches a divergence low. My triggers have not broken through. There is no clear path. I've already got divergence over here. And guys, if stops go beyond the triggers, you have an enormous amount of risk on this trade. Only 2 triggers through this one. Only 2 triggers through this one. This one doesn't even have all the triggers through. And we've reached another stop. So if you said, I'm going to try this trade, I just want you to realize that you're hoping this fib breaks, you're hoping this fib breaks, you're hoping this fib breaks and the 1-to-1, you're hoping this fib breaks, and you're hoping this divergence breaks. That's a huge range. On a trade that's already told you, I'm losing momentum, and we're looking for momentum to break areas. Does that make sense, everybody? By going back to those core concepts of momentum and path, the core concepts, the same things that we talk about all the time, you can say to yourself, golly gee, I don't care for this. That's not my look. That's not my edge. That's not my advantage. I choose not to trade. Whoops. That is my untitled workspace, and it has nothing on it. All right, crude oil. They're dancing, aren't they? No momentum. The smalls are inside of the large. Loss of momentum, and sure enough, they blow right through the area inside of triggers. Whoops, I want both charts. Let's do it again. I don't have momentum. I do have a clear path in an entry area. Actually, you've got 1, 2, 3 divergences in the same price range, which means you don't even have a clear path, which means you don't get to be surprised when the market pushes up. That's what we call a small chart termination, guys. 3 or more divergences in the same price range can end a trend. I'm going to go to the instructions real quick. How are we doing it here? Can you guys hear me? Not a lot of participation today. You got to go, 84. Wifey says it's pool time. You would be crazy to argue. You would be crazy to argue. You've been working on getting rules checklist for Ninja Trader 7. Will not work. Tried everything. Turned it over to Jason. Yes, you followed your instructions. Went to Google myself. Nothing. When you say trend trade, getting rules checklists on Ninja Trader 7, Paul? Oh, to take the picture and post it on there? I got you. It's not Ninja Trader 7 that's the problem. Paul, it's your capture software. So your capture software either allows you to take a picture and post it on a picture, or it doesn't. It has nothing to do with Ninja Trader 7. So if you really want to just not even fuss, this is the one that I know works. It's $39 for a year. $39. That's a pretty good investment into a tool. Snagit will let you do it, Paul. So if it's really important to you, it's going to cost you 39 bucks to get it done. And it'll be no fuss, no muss, no worries. Yeah, so it's like turkey bacon, right, Paul? It kind of is like bacon, but it's not. Sometimes you just got to go to the real thing. Good stuff. And Jen, you said, is that a pivot stop out on the large chart? Sorry, guys, my scrolling kind of stopped scrolling. Nothing worse. I actually like it. I hate to admit that. Jen, were you asking about this? Is that a pivot stop out? Absolutely it is. Here's your pivot. Your loss of momentum creates a line in the sand. This is where the sellers said no more. When the buyers reach it, the sellers get sneaky. They said, let's let them think they won. And let's stop them all out as we smash the market lower. That's your pivot stop out, 100%. Because the small triggers get through it, Jen, not a strong top. Does that make sense? Just because it's a pivot stop out doesn't make it a strong top. And look at the weakness, and the market isn't pushing down. Gosh, one of the best lessons ever, guys. If there's not momentum to push that market down, why are you believing it has to go down? Just curious. All right, Paul. It's trapped. Definitely wait until it clears this channel. Don't fight this up or down. So, Paul, are you saying that with termination conditions on both sides of you, your plan says just wait for the breakout rather than hoping? That sounds like a pretty solid plan, man. Jen, there's your pivot stop out again. The sellers thought they were going to win. The buyers let them think so and then stopped them out. Right back into resistance, right back into support. Okay, I've got newer people in here. Guys, let's talk advantages for a second. RS, are you with me? Weak triggers says rule number 1's not met. And the market retraces. And it hits Fibonacci support. And absolutely no triggers make it through that area of support. Rule number 2 says don't go short into it. Don't hope for a miracle. Then it retraces to resistance. None of the triggers break through. Still not looking for miracles. Once again, once again, once again, once again. Come on. Snagit can't keep up. And once again. Ladies and gentlemen, you know where the market may turn. You know where it may bounce. You know where there could be a problem. Just like Paul said. Not trying to be first, guys. This is the S&P. The S&P on average exchanges $174 billion a day. A day. It takes 400 a day to be a six-figure trader. Call your shots. Wait for your advantages. You don't have to be first, guys. If my triggers get below this line, I haven't reached this fib here, we'll look for an opportunity. But until that happens, I'm totally cool doing nothing. I don't have momentum. Rule number 1's not met. Rule 2 is met. No, it wasn't, because the 3 divergences in the same price range. 2/3 of my good stuff is gone. Because every time I look for a trade, ladies and gentlemen, this is my recipe. Do I have momentum? Is there anything in my way? If I say no to both of these, I'm going to find a way. Crude, nope, that's gold. On the wrong side of the triggers for easy shorts. Pulling right back to the zone. Do have odds favorable, momentum down. Have a lot of traders that'll sell that pink line and see if that's the beginning of the drop down to 52. Let me know how it works. Area held. Everything is trying to work its way down. A lot of zones today. A lot of supply and demand, guys. When the market consolidates, you start to see a lot of areas that could stop the market. This one says triggers up. Can't trade into that area. Look at the tails. They tried and failed, tried and failed, tried and failed, went right back to it, and they're in the middle of failing. Got to be a lesson in there. Crude oil hits the areas, no triggers. Look at the bounce, right back into the zone. There's gold again. RTY, areas to the freaking tick. Pretty cool. And even if this doesn't say go short, what it says is, hey, cool it on the longs. You've reached something that could stop the market. What an amazing advantage. All right, guys, I'm going to take a minute. This is what we call the gap theory. When price accelerates away from the large triggers, hits fibs, hits a mid-band. Guys, very often the market will try to close that gap to the triggers. So I'm going to leave that circle on the chart. We'll see if it happens. I'll be back in about 5 minutes. The rest of the class is yours. We'll keep doing the chart reads, but guys, tell me what you want to talk about. I want to give you everything you need to be successful. It's like having a magic 8 ball, isn't it? I walk away to take a break, put a circle on a trigger, and I'll be darned, it goes right back to it. Used to aggravate me. My brother used to do this. The market would be right about here. And I would say to myself, that's a perfect looking entry. I can't wait to go long. And right about the time I'm getting run over, he's saying, all right, guys, the large triggers didn't follow. We reached Fibonacci resistance. This is where the market is most likely to go back, guys. This is what we call the gap theory. This is recognizable. You can see this. You know about it before it happens. There's a set of rules for it, and it keeps you from getting run over on the way down. Some of you have said, you know what, Mark, I'm learning patterns, and when I see it hit Fibonacci resistance and these large triggers don't follow, I'm going to look for an entry to close the gap back to those triggers. So for brand new users, it just says, hey, don't go long. For you experienced users, it says there may be an opportunity to go short. And guys, when the market doesn't find a Fibonacci area and does this very often, they're looking for the lower levels, whether it is this one or whether they're looking to get to the edge down here at 64.99. And we'll see if it gets there. And that was crude oil, and you'll notice crude oil has odds favorable momentum. And they're trying to get down to that next key zone as well. Does that make sense? Patterns. That's all it is. It's just patterns. Weakness tells us that it may retrace. Fibonacci areas with the large triggers more than a full bar away lets us know that it may close that gap. And then if you go back and just look at patterns, you'll see that that happens a lot. Couldn't make it, pulls right back to the fib, closes the gap to the triggers, finishes the move up. There it is. That was 4 hours ago. Couldn't make it, pulls back, finishes the move. Didn't make it, pulls back, finishes the move. Pattern, pattern, patterns. With the chart reading I'm doing, you realize even more trading less is key when the rules are met. Jen, I appreciate that. I had someone else tell me that as well. I had somebody say, so for those of you that are newer with me, we didn't focus on live chart reads as much as we have lately. But I would start every classroom. Every classroom got started with this picture. Let me bring it up. Right there. And it would say chart reading, guys. Learn to read your charts. Learn to see what they're telling you. And what you'll realize is that 90% of every day is spent reading indicators. 90% of every day is doing nothing. 90% of every day is seeing advantages and learning how to capitalize. 10% of your day is being active. And I had someone tell me in the room, they're like, to be honest with you, I didn't think that was true. Because, guys, we're all people that, whatever business you've been in your life, the people that work the hardest make the most, right? That's what we're always taught. Work hard. If you work hard, you'll find success. If you work hard, guys, trading is so counterintuitive. It's the people that do the least. It's the people that sit still when there's nothing to do. Those are the people that are getting written up in Fortune 500 magazines. It's not the person with 150 trades in a day. It's the person that can sit still when there's not an advantage. Andy, it's like you're mad at me when you post in this room. Somewhere behind all this writing is momentum. The bar is passed. I think you've got strong triggers. Pulls back to the zone. You go short and out at the zone. All right. So You're below trouble. Is that right? This right here. I'm joking with you, Andy. That's what I'm looking at. And it's just funny. Click that back up. What's with the darkness? It's okay though. So you're coming from the area. The triggers are coming down strong. And you're saying, man, the body of the bar is below trouble, right? See how the tail held and went up and the tail held and went up? And Andy is starting to recognize that when the body of the bar starts getting below these areas, man, it's breaking the area. Price is getting past the trouble spot. And then Andy, with the momentum, I love it. You let it break through the zone. And when it comes back to retest that zone, you go short. And you take it to the next problem area. And it's a beautiful momentum-based trade. And I think that what I'm really digging about your chart read is you're recognizing that on a minute chart, when the bulk of the body really starts to get below an area, the triggers may not follow, but if your small chart supports it, there's going to be opportunity in there. And I think you're killing it on that. You read that all on the left. You were concentrating on the small chart. You're trying to make sense of the right chart. So you had it, the body of the bar. And I took a picture this morning, and let me see if I can find it. And I'll show you exactly what I mean. When I talk about, when you guys are using these minute charts, and Andy, this is the picture that I took this morning. See how the tails on all the previous bars? Can't break it, can't break it, can't break it, like 10 times. And I said exactly what you pointed out in your amazing picture, is that these tails are telling me that they're struggling. For shorts, I'd have to see bodies below the zone. I typed that at 8 a.m. this morning. Andy, you absolutely nailed the chart read. And then you use the small chart to find a way to do it. So I'm singing your praises, but I think it's funny that I've got 72 acres of blackness and all of your indicators in the drop down. And that's your focus zone right there. It was that little part of the chart that got you to this amazing entry. Great job, dude. It's all positive. I used to do that too. One of the biggest things I would do is, guys, I would trade like this. For whatever reason, I felt like if I had all this gray here, it made it easier. If I was in a short trade, I'd move it up here so I had room to go short. If I was in a long trade, I would move it down here so I had room to go long. Like my chart scrolling has anything to do with the outcome of the market, and everybody sees it differently. So I guess I'm amused just because it's the same thing I did. So guys, when this termination holds, when all your indicators start down, you guys recognize the pullback right to those large triggers with an area in it? Jen, did you recognize that one? That's kind of the one you're working on. It took longer to set up. Joel was working on a checklist for this as well. When a termination happens and everything rolls, sell a pullback to the large triggers with an area. Bingo, right? And now we use, where are we anticipating? Let's see if it makes it to a fib. For you guys that are just trying to jump in with momentum, you don't have momentum yet. Hard to jump in to a momentum trade without momentum. How we doing, guys? I'm going to start muting myself a little bit. How are we feeling? Let's do this. Let's build a chart. We'll just do create a new layout. And guys, I'm going to put nothing but triggers on this chart. I'm going to get rid of volume too because I don't need that. So I'm going to go to my indicators. Invite only because I'm kind of a big deal. And I'm going to put trigger lines on it. Whoops. And we're going to do a quick little trigger study here. This is a 15-minute chart. What is this? That's gold? I don't want gold. Gold has been straight lining all day long. We'll do the ES. So guys, basic 101. Do you see how the small triggers are below the large triggers? That's your strength. That's the best of the best. Small triggers are above the large triggers. That's your best of the best, guys. And what you can say is that from here to here, that's where my advantage of momentum is. That's where things are absolutely the strongest. So from here, really to here, that's where my advantage up is the absolute strongest. These are going to be some of the easiest trades that you ever take going in the direction of the trend. Does that make sense? You guys on TradingView, does that make sense? I hope it does. But momentum isn't really enough. So what we do is we start adding these ideas in. I'm going to put in one-to-ones. One-to-ones show me areas that could stop the market. So guys, even with the momentum, look how the one-to-ones stop, create a reversal. And they come all the way back up, and it's the one-to-ones that create a reversal. They test the one-to-ones here. They break through, come back, trade off the one-to-ones here. So what you're doing is you're saying, okay, first I need momentum. Momentum is amazing. Momentum is solid. Momentum gives me a market that's likely to push. That's why we cover that one first. And then you can slowly add indicators in. So I'll add in divergence. Divergence prints when there's a loss of momentum at a pivot. Whether it's a high pivot or a low pivot, these divergences show up. Well, there's that 3 divergences in the same price range. That's what starts the move up. There's divergence right at the key area. There's a great push down. Sometimes you get losses of momentum in fights. Divergences can behave as termination conditions. So we're compounding our advantage. First, I have the advantage of momentum, but I also want that clear path. I want to make sure that I'm not trading into an area that could stop the market. Trigger lines, fibs, one-to-ones, divergence potentials. And then finally, because Nexgen has been using Fibonacci for decades, programmers are working tirelessly to get Fibonacci to print on these charts. Oops, did I get it in there? I did. But until we can get zones of supply and demand to print on the chart, and mine aren't printing, and it helps with the accuracy, there we go, of areas that could potentially stop the market. So you look at the zone, the momentum is strong, but it hits the zone, and there's the bounce, right? And the momentum is up, and it retraces right to the zone, and right off of the zone, and right off of the zone, and over, guys, you see this. So I hope that's a good illustration. Everything starts with momentum. And then once you have that momentum, you can start gauging whether or not there's something in the way. And you can look for your opportunities. Oh yeah, so Jen, he has programmers working hard to get Fibonacci for these charts. It has proven to be a challenge, but my brother is stubborn. It's a Novak man characteristic. So hopefully in the near future, we'll have that Fibonacci going as well. And who knows, maybe one day they'll get the Rinkos to show up as well. But the recipe doesn't change. First, we look for momentum, guys. And when you have momentum, all you have to do is say, am I trading into something that could stop the market? Or as Andy points out, am I getting below it? So I've got momentum. I'm getting below. I'll look for opportunities for short. I'll let things come together and I'll see if I can find an opportunity for short. Haven't quite made it. Haven't gotten through. Too soon for shorts. Not the right look for longs. Uh-oh, it looks like they went down to that zone on crude oil. Nope, we're right here. Still holding, looking, waiting, wondering. Yeah, Jen, John Novak is in a constant state. So there's it was a running joke forever, but when you looked at the glossary of common terms that we used to have in the website, there was one called HBNS, happy but never satisfied. And John Novak is the living entity of happy but never satisfied. He loves the software. It's the greatest software in the world. I firmly believe that. But he's always looking for a way to do it better, whether it is find another pattern that creates an advantage, whether it is a different platform that offers more stability, right? He's always looking for the next great thing. And Fibs was his first great thing. And if you guys, gosh, I don't know if you can find it. For those of you that want to get to know John Novak a little bit, he did an interview the other day with Eddie, the owner of Easy Trading Computers. Let me see if we can go to his videos. He did an interview with John Novak. It was awesome. He may not have posted it yet, but they spent an hour talking about where Nexgen came from. They spent an hour talking about what John did, how he did it, where he did it, who he did it with. This guy is like the guru in trading computers. And he's a big fan of John Novak's. And they did this awesome interview. I'll see if I can find a link. Pablo, you found it already? There you go. And they're working on another one. Appreciate that, Pablo. There you go. That's the guy that did it all. If you've never seen him or met him, John Novak revolutionized using Fibonacci in trading. And there's an example of it right there. And then you couple this with momentum. And guys, you didn't have momentum here. And look what the market's doing. Don't have strong triggers. Loss of momentum. Sure enough, the market's pushing up. It's almost like you can predict the market. Do I have the momentum I need to push? Is there nothing in the way? That's your question every day. What time is it? It's 11 o'clock, guys. I love that. That means it's time for you guys to start asking some questions. Here's a great example of why it's an accumulation. There's my momentum. There's my clear path. Rule number 3 says areas inside of triggers. Guys, I don't have areas inside of triggers. I've lost my entry rule. I don't have my entry rule. Avoidable loss. And then look at this. 1, 2, 3 divergences in the same price range. If I'm going through that very basic, once again, large chart says momentum and path. Small chart says no entry area because it's on the wrong side of the triggers. And once those 3 divergences print, I give up the clear path as well. Once again, absolutely no reason to take a hickey on this one. Not if you're walking through that. Does that make sense, guys? There's a lot of you sitting quiet, so you either have everything you need and you love the sound of my voice, or you're trying to figure out how to ask the question. Guys, ask the question if you have it. All right, Miss Jen. This was a trade for mistake purposes. In late, no momentum, disaster. Did this on sim, wanted to make a mistake. Entered late, that's what happens when you break your rules. I'll do this in the room sometimes, Jen. And that's one of the reasons why I tell you guys every day, 10 times a day, this is an educational room. This is a room that talks about chart reads. This isn't a room that tells you when to enter, when to exit, how to manage. This is a room that gives you a trading plan that you're welcome to follow. But I refuse to have any responsibility for the decisions that you make as a trader. But let me show you how great this picture is. And Jen did it on sim, right? And Jen starts, she says, no momentum. What a horrible look, right? And then she says, late entry. Great entries make manageable trades. And she holds, and she holds. So no momentum, losing momentum, and eventually she gets stopped out. These are things that you can do, whether it's taking a picture or whether it's just watching the market. And what Jen did is she took her inner voice, and she translated it onto paper. Everything that she talks about before she looks for a trade, she's like, let me take a picture of it not happening. Let me show you what happens when you break rules. And Jen, that's great because you know that you're breaking rules. You know that you're going into the trade breaking rules and you want to see what happens. Now, let me talk about, Jen, because you know I'm going to do it. Let me talk about the other side of that practice. But the other people may not know, right? So Jen says, I'm so bored, I'm going to break my rules. I'm so bored, I'm going to break my rules. I know my rules are broken, but I really want to be active. And then Jen, all of the sudden, with the rules broken, well, we'll just use it like this. All of a sudden, with those broken rules, the market makes the decision to finish the move all the way down to Fibonacci support. And guys, what your brain says is I broke all of my rules and made money. Maybe I should start breaking my rules. And I did this. And let me tell you the Mark Novak story. I did this for the first 30 days I had software. I didn't even write down a plan. I had no idea what I was looking for. I had never asked for any help. I just assumed that I was freaking brilliant because let's face it, I'm freaking brilliant. And I took these trades that didn't have an edge, and I took these trades that didn't have an advantage. And that's what created this picture here. I didn't do anything to learn it, and then I went live because my brain didn't realize that I got lucky, right? My brain had no idea that I was getting lucky and not trading something that would produce long-term results. And guys, I did. I lost $5,000 in one afternoon or one morning, 21 trades, about 2 hours. I was separated from $5,000. And Jen, I know that you know what you're doing, but it was because I got lucky. It was because I got lucky, and those short-term victories created long-term failure for me. So Jen's at a point in her trading where she can go into that and say, hey, I'm just breaking rules I expect to lose. But your brain, that dopamine kick that you get when that bad trade wins, it's going to struggle with whether or not it's willing to adhere to the rules next time. And Jen knew that lesson was coming, and she did that for you new people. One of the most common phrases that you'll hear in the education process is short-term victories typically produce long-term failures. Lucky wins aren't repeatable. You can't repeat luck, guys. But what you'll find is the more you follow rules, the more luck you seem to find. All right, what do you guys want to talk about? We are directly in determinations from a bad bottom. We'll wait for the reaction. Termination condition held. Holy smokes. Close the gap back to the triggers. Smalls are below the large. Absolutely nothing in the way. If I get a pullback, ladies and gentlemen, I have a mid-band inside of triggers. Are they going to give us one? Do you see the momentum? Beautiful. Clear path? Outstanding. Area inside of triggers? Flawless. The only thing I need is this market to come back and get me. Some of you jumped in about right here, made your $100, got out, hoping for a trend trade. Let's see if it gives it to us. Oh, here come the buyers. They want to fight, but they're fighting against momentum. They're fighting against a clear path. My entry rules say sell a pullback, a little retracement. right at an area. There's a mid-band inside of triggers. I've got everything that I need right now, guys. I've got a termination that reversed the market. I've got the strongest trigger look ever. I haven't reached Fibonacci support. The only thing I don't have is a pullback to an area inside of triggers. If I get that, guess what? This is a pattern that I can prove through historical study. This is a pattern that I have verified typically wins up to 70 to 80% of the time, which means I have an edge. I have an advantage. This is nothing more than a pattern that is predictable. Here they come. Come get me. Should be 2 ticks below. We'll see if we can force that entry. Oh my goodness. If we get an entry at 63.25, ladies and gentlemen, my stop will go 4 or 5 ticks above these triggers. That's where the market should not go. This is why we say a couple ticks below resistance. Let's see. See them slowing down as they get to the entry point? That's them making decisions. There we go. First target's at $100. Second target will go to Fibonacci support. If I get a reversal bar in the direction of my trade, ladies and gentlemen, there it is. I'll reduce my risk behind that reversal bar. When my first target is hit, I can go break even, protect my investment, or I can just keep it above that pivot and see if they want to make it to Fibonacci support. Ladies and gentlemen, this is the highest probability trend trade you could ever take. The KISS plan I gave you says get paid right there at $200, turn it into a $300 a trade, and call it a day. I'm going to be greedy and see if all that momentum in the clear path wants to go to that big, pretty blue line that John Novak created. Are there any questions about the entry? Are there any questions about the look on the large chart? Ladies and gentlemen, we're doing it live. We're doing it live. Could I get paid at 1-to-1s? I certainly could, but I choose not to. Now, if divergence prints from these 1-to-1s, I might mash my close button and wait for the next trade. If it never happens, guess what? I'm going to see if I can ride that momentum all the way down here. Some of you will say, you know what? Whoops, if I get a reversal bar off those 1-to-1s, I'll exit, I'll take my profits, I'll wait for the next trade. But guys, that's it. That's the trade. That was the easiest $250 you'll ever make. Could have been more, but I got greedy and I managed out of it instead of getting paid at the areas. Just closed out ES. Did you close down your charts? Pretty awesome though. So let's go through it. Hold on. Oh, you open the NASDAQ? New users, this is where I drop the microphone and ask you for your credit card. I just want you to know that. A trade is momentum. A trade is a clear path. A trade is a pullback to an area inside of triggers. Ladies and gentlemen, I sold the high tick of that retracement. I took $100. I could have just taken my $200 and called it a $300 trade. But when divergence printed right from the 1-to-1s, that's my exit. Ladies and gentlemen, that is a $250 trade over the course of about a minute using a methodology that has been proven, that is testable, that is repeatable, that is verifiable. Welcome to Nexgen, ladies and gentlemen. This is what we do. Fits my checklist. Fits my rules. And it could still go down. Who cares? I made $250. If I do that 3 or 4 times a day, that's a good day. You can't have remorse over exiting a trade. Not if you had a reason. I had a reason. Divergence from 1-to-1s, guys, that's an exit condition for me. I can re-enter from the area with a reversal bar. If it doesn't happen, guess what? It's not my money. But we called exactly where the sellers were probably trying to get with all this momentum. Don't need a magic 8-ball, ladies and gentlemen. All you need is a little momentum and a clear path. Find an entry. Did anyone else take that trade? I mean, that trade was 32 pounds of sexy. Termination, termination, Jen. You have divergence with still a 50-50. You missed it while you were typing. There you go. 452 AMW. That's a new name. You caught it? Nice job. Post it in the room. You know what's fun for me, guys? Jim. Good to meet you, Jim. Is when people from all over the world, different backgrounds, different time zones, when you guys start posting the same trades in the room, when you guys start using that momentum and that clear path, and together, it's like you guys are connected because you know it's a pattern. All right, Jen, there's your termination condition. There's your triggers rolling. There's your mid-band right inside of those small triggers. Is that the look you're studying, Jen? First it's a termination, then it's a roll, and then you're looking for a pullback. All right. Let's see if it does it. Does it guarantee a winner? It's counter trend, right? I don't have momentum. I do have path. And I've got an entry area, 2 out of 3. All right. How many up bars are we going to give it? How many up bars are we going to give it before we call it a day on this one? I typically give it 2, maybe 3. If it doesn't go, it doesn't go. We'll keep it on the other side of the triggers because Joel has a plan that says from a termination, when the large rolls, sell a pullback to the large. I'm okay with 9 ticks of risk coming off a termination condition. We'll see what happens. There's your pullback to the large. Small triggers are down, large triggers are down. Termination condition held, but the large chart has momentum up, just nowhere to go. There's no way this is a high probability scenario. And if those buyers can push to the other side of those large triggers, man, I don't want it. And if they can't, I'll hold the position to see if they want to continue the move. And Jen, 100%. High probability trend trade is a lot less stressful. Why? Because a high probability trend trade, guys, has freaking everything in favor of the trade. Right to Fibonacci support. There's your bounce. It's the easiest trade you'll ever take, guys. In between fibs with all the momentum. Why do people take other trades? Have you ever asked yourself, why am I looking for more trades? If I have one trade that presents itself 3 or 4 times a day, and I can typically win 3 or 4 of those trades, why am I looking for more trades? Is it because you're bored? Is it because you can't stand the thought of a market moving without you? Is it because you're actually not catching the best trades? You're talking yourself out of them? Guys, you got to ask yourself that. What's your daily goal? What's it going to take to get you there the most efficiently, the most effectively? Do you guys ever has anyone ever done that? That goes back to the idea of a trading plan. Oh, shoot. Here we go. Just committed financial suicide. We fought the large chart. Amen, Jen. So, I love that you just said that. Let me find the picture. My brother wrote a bestseller book. And guys, I don't care who you are, what you trade, where you trade it. There's 2 ways to kill your trading. First is trading against momentum, trading against strong triggers. No matter how great you think your entry is, guys, if you're fighting the large triggers, you're more apt to lose. Trading in determination conditions is part 2. And this was written tongue-in-cheek by John Novak, who has been training day traders for the better part of 30 years. And these are 2 gospel truths, guys. Oh no, did I just kill my large chart? That's a 21. What he realized was that people who fight momentum in the trend lose more than they win. People that trade directly into termination conditions tend to lose more than they win. And it's one of those things. It happens over and over. Both are avoidable. Both are 100% avoidable. Not mad at Mark, but none of this matters much except it might clue you into areas to take profits or avoid. That's okay. So you're looking at a zone, and the zone says, no, you're good. I was just giggling because you had it tucked up into the corner here. This is beautiful. You didn't take longs into it, and now the bars get below the zone just like you did last time. And did you find a short off the HVA? Didn't? You bought. All right. You bought at 14, stopped out at 10. So, all right. So, Andy, I'm going to show you something pretty cool. And let me show you just how short the human memory is. Whoops. This was momentum past the zone, Andy. Easy short trade. You won with zero stress. Now hold on. Couldn't we say this is momentum past the zone? Got beat up on trying to go long. Guys, this is how your brain looks for a trade and not rules to be met for a trade. You said that because of this look, I'll go short, and you made easy money. With the exact same look, you tried to go long, and it didn't work. And I believe Jen referenced the bestseller, How to Commit Financial Suicide. Does that make sense? You were buying a reversal area. What is a reversal area? Okay, so you made money. So my apologies, Andy. I didn't realize you got paid on half fighting a 15-minute chart that said it was more likely to go down than up. All these candles printing above small triggers. You're through the areas. You're past the zone. Everything is below it. So I don't know what your plan is. My plan says don't fight strong triggers. My plan says this zone has to hold for me to look for long trades. You have a different plan. All these candles printing above smalls is your plan. That's awesome. You're outside of the outer band. The momentum is down. You're outside of the outer band. I'm just going to say, Andy, it's aggressive. It's an aggressive short. And I'll be damned. Down it went, brother. Right to the zone. Now, if you were looking for a long trade, it makes sense. Because now you've reached the zone. You caught a tiny little fluctuation against a strong trend. And I'm glad you got half paid. If you had just gone short at an HVA line, you would have been paid huge. It's just a candle. A candle can't be super strong. And there was no reversal, Andy. You're below everything that you would hope to create a reversal. You have a tiny little fluctuation on a 1 minute that says, hey, we're right here. There's a few of us that think the market should go up. And it did. That's it. That's all it could do against that. So I'm not telling you don't take the trade. I'm not telling you what you did was wrong. I'm not telling you anything other than with this look, there's one easy direction. Sell an HVA. Sell a close below the triggers at the out of the band. Sell the HVA right at the zone, right? And if you change your thinking to following the big, bad, strong, getting below everything chart, you're not scraping for nickels, man. You're taking these awesome moves from zone to zone with the momentum, from HVA down to the next area with all that momentum, instead of saying, man, my large chart says down with strength. I hope to hell this 1 minute chart can change the entire direction of the market. Does that make sense? And some of you love these little moves, Andy, and those little moves might make great sense to you. They're aggressive, they're counter trend, they fight everything good. But now look, now we've reached the area, and even with the strong triggers, now we can see the small chart showing change. We have a zone to come from. Now the triggers have rolled. Now it's moving up, right? And now maybe you look for an opportunity for the long because the large chart has settled into a spot that could reverse it. You're still fighting strong triggers, but now you've got that solid foundation, that base to give you at least a fighting chance to go long. And because it's coming from a zone, look at the difference in the move. They struggle. They struggle. Big chart hits the zone. Holy shnikes, there it goes. Does that make sense? I don't think what you're doing is wrong. I think that it's aggressive and it's a small profit, and I think you're tripping over nickels and missing a lot of dollars by fighting a large chart as aggressively as you do. But you have a plan. Trade your plan. My job is to do the chart read and see if there's a way to do it easier, more effective. All I want, guys, I'm like your grandmother. All I want is for you to be successful. And if I see you touching a hot stove, I point out the hot stove. This one hit the areas. It's supported. Awesome, Andy. Unless you're writing me a check for half of it, the money's irrelevant to me. I've got money. I'm good. I'm all about chart reading. I'm all about advantages. I'm all about staying in this game for as long as I can. There's a reason John Novak wrote this book. Because these are two of the biggest killers for day traders. And day traders get lucky fighting strong triggers every now and then. And day traders get lucky trading in determination conditions every now and then. But most of those day traders are back at their 9-to-5 job, wishing they hadn't done it. So there's a way to have an advantage. There's a way to forfeit the advantage. You do what works for you. That's all I'm saying. Do what works for you. But you can't post in my room fighting triggers and me not say something. I wouldn't be doing my job. That would get me fired, and then you guys would miss me. You'd have to go find someone else to talk to you all day long. All right. No, the momentum is up, but there is no clear path. These triggers don't even match. Divergence on both sides. Go make a sandwich. All right, if you're new with me, is it anything short of kick-ass that you knew where the market was likely to go? Where you knew where it could turn? And then when it does, Jen, did you get your trade set up? Termination holds, triggers roll, path is clear. There's the pullback right to the large triggers. It's not the prettiest. You were in the kitchen? Oh, don't get me in trouble. You better not have had shoes on. But I kid. In our house, the joke is when my wife goes to the kitchen, I'm like, get out of my kitchen. It's no place for a woman. My brother and I both cook. We love to cook. We grew up cooking. So our wives are spoiled rotten. All the momentum breaks an area, hits the big area, and there's the reaction. There's the reaction coming right off the area. Does it mean it's going to go down now? Absolutely not. Doesn't mean that at all. But it means that you know about Fibonacci areas that can create a bounce. And even though these two didn't, that one did. And that one did, even with momentum. And that one did, even with momentum. And that one did, and that one did. Hold on. And that one did, and that one did, and that one did, and that one did, and that one did. You see where I'm going with this? You know about them. You don't have to trade into them. They break all the time. All right. I'm going to mute. So it is on you guys. What am I going to talk about? What do you need to hear about? What's going to make you a better trader? What's your challenge? Do you need help with a plan? Are you struggling with momentum? What you got? All right, guys. I'm going to mute for a second. I'll be back in 3 minutes. Think of something. Back in a few. Oh, still didn't break. No momentum. No clear path. Do you guys see it? Can you hear me? Did Discord die again? You guys off in your own world? Okay, just want to make sure. Just want to make sure. Man, so hit a zone. Rolled up. Gonna make some decisions here, guys. S&P couldn't break the zone. Rolling up. Can't think of a reason to go short. Crude oil hit the zone, rolled up. Can't think of a reason to go short. Might be a little aggressive on longs. Gold, momentum and path, guys. Somewhere in there was just the mother lode. All the way down to that area. And sure enough, that area is creating a bounce. There was your HVA trade right there. When a zone holds, breakout bar, confirmation bar, HVA prints, pulls back, off it goes. Guys, that's one of the trades in the plan. Whew, RTY is skyrocketing. Holy smokes. Pablo, did you catch some of that? Was there an opportunity in there? There's your trend trade right there. 21.90, a little bit, nice. And then you see how the momentum just rails it all the way up to that next zone? That's a good one. That's a go play golf trade there. That's a I'm done. I'm going to go get angry at a little white ball. Nicely done, guys. Nicely done. And then XRP, dag nabbit, right off the area, right back to the zones. Need to tell my wife to go buy some more, maybe. We'll see what that does. That's only a 4-hour. Nothing to do. Caught in between fibs. All right, I'm muting, guys. You guys tell me when it's time to talk. This is where my brother yells at me because I talk too much. So I'm going to mute. I'm going to go ahead and stop